This lecture is on the banking multiplier and a first look at counting money. If you were given the task by a central bank, you were hired by the Fed in the United States and told to go out and count the money in the economy, forgetting how hard that would be, what would you even count? So what do economists count as money? Well, we want to look at stuff that's going to matter for consumption decisions. So we want to look at the money that matters when people make choices about consuming things. So the first thing you might look at is certainly currency, the cash. So the first thing we measure when we think about money is definitely currency, CU. That's literally the cash in your pocket. I have cash in my wallet, maybe $10, $20 that I keep for just daily simple expenses. Definitely that counts as money. What else would count as money? Well, clearly any other money you're holding in your bank that you're using to spend and pay bills regularly, pay your gas at the pump, to pay at the grocery store, any of those kinds of things are going to count as money. Those are held in what we call demand deposits. A demand deposit is something like your ATM account that you just take cash out and go pay, your debit card that you use to pay expenses at grocery stores, gas station, and so on, like I just said, or in the United States, your checking account where you write your checks out to pay your bills. Any account that is accessible immediately upon demand, and it's your deposit. Technically, this money is what the United States Fed and other central banks calls M1. It's the most liquid. The second measure of money in an economy is called M2. It's all of this stuff. So if you were told to go out and count M2, you would first go out and count everything in M1. Everybody's cash, and you'd count up everybody's demand deposits. Then you'd say, okay, what else influences their purchasing decisions regularly, and what they use pretty regularly is fairly liquid. And then you would have things like money market, mutual funds, and other things that are easily accessible as spending cash, okay? You can go from there to even more complicated things that are even harder to convert into liquidity. So it may take me a little bit to convert money from my money market account into cash and to spend it. But here we get into longer term savings accounts, things that might go over a year long in very short term bonds and all kinds of things. This can go up to M4. Some countries will calculate like M10. Art. I don't know. Super non-liquid. The key is M1 is the most liquid, and then as you go down you get less liquid. Liquidity meaning something you can quickly turn into cash. So, let's keep this counting of money in mind. We're going to focus on M1. And now we're going to look at when money is put into the economy, where does it go? And then when we go and try and count the money in an economy, what do we count?